The soy complex had a tough time holding on to mid-morning gains while wheat futures reversed early losses to end the day solidly higher. Corn was, kind of caught in the middle of the whole thing. The selling in lean hog futures continued, and live cattle futures closed lower for the first time in 8 trading days.
Live from the 8th day of the week via Farm Journal Studios, This is AgriTalk. This afternoon, we'll chat with Pete Meyer from Muddy Boots Ag. And directly following the news, Oliver Sloup from Blue Line Futures. I'm the handsome newsman, Davis Michelson, now the host of AgriTalk, Chip Lorre.
I was wondering if maybe there wouldn't be a little singing coming my way. You know, with something like 8 trading days. You know,
See what
you know
there?
what I'm talking about?
I do know what you're talking about. It's a self-fulfilling prophecy that you're talking about right there. That's what just happened. I don't need to sing. I'm taking the afternoon off. You got it, buddy.
Nobody is willing to pay or even leave the radio on to listen to me sing, dude.
You might be surprised.
Yeah. There's, you're right. I got the enemies and the haters out there that would love to hear that.
In all of my years of being on the radio, I've worked very hard to lower the bar. You know what I mean?
Right.
So it's a layup at this point, dude.
You think? Wow.
After some of the rubbish I've put out there.
Oh my goodness. Welcome to AgriTalk. I'm Chip. That's Davis.
Hello.
We got Pete Meyer on the show today.
Did we bring out the Agro welcome mat? Muddy Boots. Is he going to be tracking all over the studio
Telling
over there?
you what,
Are we ready?
That is an Agro red carpet we are breaking out for Mr. Pete Meyer. Yeah.
Except it wouldn't be crushed shag. It'd be like that what is that? The plastic stuff, and it's really scratchy kind of, and it sticks up about an inch. That's our red carpet. Yeah.
Are you thinking of the indoor-outdoor variety of red carpet?
That's it. But long, like really long.
Really long.
You want to get it all in those crevices in those boots.
Yeah, makes you want to get out there with the mower. That kind of a thing.
That's it.
That's it. Biofuels. You know we're going to talk about biofuels and where things are looking, pointing, and how producers might be responding to some of the incentives that are coming from not only the marketplace, but coming from government programs. Where is the incentive? We'll talk about that with Pete coming up. All right?
Like that. Yeah.
All right. Excellent. Let's get to the news. What do you got?
Chip, old crop wheat sales in the weekend of May 16 totaled at nearly 18,000 metric tons, with new crop sales of nearly 225,000 metric tons, both in line with trade expectations. Yeah. Neither did much to support prices. The International Grains Council cut its forecast for the 24-25 global wheat production by 3 million metric tons to 795 million. Most of the cut was based on lower crop potential from Russia and Ukraine. Wheat futures opened steady and traded mixed at mid-morning, then pushed higher into the close. July HRWD wheat futures were 11 1/4 cents higher at 7.10 3/4. July SRWD wheat up a nickel to 6.98. July spring wheat closed at 7.44. That's up 7 1/2 cents, Chip.
Yeah, the IGC, it's not a lagging estimate that we normally see from IGC. Sometimes they get out in front of the market, and in this case, knocking 3 million tons combined off of Russia and Ukraine. They're behind the private crop estimators, but they're not behind USDA.
Well, export sales of corn in the weekend of May 16 of just over 911,000 metric tons were in line with trade expectations and with the 4-week average sales pace. Increased risk for planting delays on the last 25% of the U.S. corn crop limited selling in corn futures. Forecasters see untimely storms over the next 10 to 14 days. The International Grains Council also cut its forecast for global corn production. The agency cut its outlook by 6 million metric tons to 1.22 billion metric tons. All of the cut was to the Argentine crop, which IGC now puts at 54 million metric tons. July corn opened fractionally lower and spiked support at 460 before recovering to close high range and above yesterday's high. July corn futures were 2 3/4 higher, 464. September corn up 3 cents, 473 1/4. December corn futures closed at 486 1/2. That's up 2 1/2 cents today.
Yeah, some of the issues in Argentina finally reflected there, and a close above Monday's high in corn futures. That's a positive move.
Soybean export sales week ended May 16 of just over 279,000 metric tons were at the low end of trade expectations and were 15% below the 4-week average. Soybean meal sales of 145,000 metric tons were short of trade expectations. Planting delays for the last one-third of the bean crop are likely, but that had little influence on today's price action. July beans opened fractionally lower, rallied to spike a new high for the month, then turned back to post a close near session lows. July beans all told 7 cents lower, $12.39 and a quarter. August beans down 5.5 cents to $12.37 and 3/4. November beans closed at $12.16, down 2 1/4 cents, Chip.
Yeah, that July bean contract doesn't want anything to do with $12.50 right now is the way it looks.
Well, cotton export sales nearly 203,000 metric tons topped the 4-week average by 19% and helped extend yesterday's upside breakout in futures. July cotton today was 234 points higher, 81.72. On your livestock's heavyweight choice graded boxed beef prices were $2.50 lower in moderate morning trade, and that pulled fat cattle futures down for the first lower close in more than a week. June live cattle were 65 cents lower today at 183.52.5. October contract down 57.5 to 184.07 1/2. And August feeders were $1.45 lower at 261.45. And finally, June lean hogs today 87 1/2 lower at 94.52.5. October hogs down 52.5 cents to 82.97 1/2. Chip?
All right. Thank you very much, Davis. Let's bring in Oliver Sloup, Blue Line Futures. How you doing, Oliver?
I'm doing well, Chip. How about yourself?
Real good. July corn got to close over Monday's high. First time we got out over Monday's high this week. That's that looks pretty impressive, doesn't it?
A heck of a lot better than last week when you and I were talking.
Yeah,
that's for sure. But as we mentioned last week, this is just the time of year where you see the volatility pick up a little bit more, and we're trading on both sides of the market. You've got bulls and bears really coming together, but that's what makes a market, and that's what makes this time of year such an exciting time of year for anybody involved in the grain markets. Now, I do think we could probably squeeze out a little bit more upside here in the near term, especially with today's close. I think we can go retest the highs, potentially get out above there. But we're starting to get to that time of year where, we seasonally start to talk about a seasonal top here within the next month or so. So I would have some dates circled on the calendar where you got to have some decisions made by to be a little bit more proactive in playing defense going forward.
Yeah. Real quick, give me 30 seconds on wheat.
Oh boy, the wheat market, it's been up, down, and all around. Right at $7 at the end of the day. It's been a series of higher highs and higher lows. I still think there's probably some upside left. I know a lot of people would probably argue against that, but the money flow is undeniable at this point. And as we always say, that the trend is your friend. So I think there's probably a little bit more upside left in this wheat market.
All right. Looks like we're going to make a new high in the cash cattle market this week. You been to the butcher shop yet for Memorial Day grilling?
I placed my order yesterday afternoon. It's getting delivered tomorrow. So I'm doing my part, certainly. Nice to see the cattle market really hold strong. Seasonally, this is a time of year where we see cattle firm up on the board, and we're certainly seeing that play a role this week. A little softer in today's trade, but heck, we had 7 straight days of gains for live cattle. So a little bit of pullback ahead of a report tomorrow afternoon and a long weekend is probably healthy for the market.
Oliver Sloup, Blue Line Futures. Thanks, buddy. We got Pete Meyer up next.
I don't know what you're thinking. So call us at 855-4TALK-AG and tell us what's on your mind.
Welcome back to AgriTalk. Glad that you are with us this afternoon. I got to admit, I think about my buddy Mike Burdo every time I hear Van Halen as bump music.
Word to Mike Burdo. You out there, Burdo? You listening?
Shout out, buddy.
Hey-o!
I'm sure he spread manure. That guy, the guy spreads manure like all the time.
Yeah, but he's one of these guys that spreads manure without even using a tractor.
Oh,
see what
he's
I did
good
there?
at it.
See what I did?
Yeah, I gotcha. I gotcha.
It gets deep too.
I'm picking up what you're laying down.
It'll make your boots all muddy if you're not careful.
Yeah. Berto's picking up what the cattle are laying down. Moving on. Pete Meyer, Muddy Boots Ag. How you doing, Pete?
Boy, you guys really beat to death the Muddy Boots thing, didn't you?
I don't know.
Just trying to get the word out, baby.
What is the situation there, Pete?
It's just the name of an LLC for tax purposes rather than put Peter Meyer Ag or whatever. It was just it's just an interesting name, that's all. No, it's not. No.
Yeah. So what is your situation? Are you working with anybody now?
I'm working with Jared Creed at JC Ag Financial, and I'm a partner in a group called Regenerative Root Solutions, which you can find on the web at regenerativeRootSolutions.com. And we're talking to farmers about sustainable practices, how we can get them paid from consumer packaging goods companies, which are paying farmers for said sustainable practices, with an eye towards the 45Z tax credit.
Yeah.
And then we're also in the futures business. So
yeah,
I got a few things going on. Here at the moment. Yep.
Yeah, no doubt. This regenerative ag, it does not surprise me that you are looking at or involved in that side of the business. Not so much because of regenerative ag, but because of the potential revenue that could be generated from some of the practices if you implement them on your farm, right?
Yeah, that's correct. And I mean, for the consumer packaging goods companies, it's an interesting scenario because they are willing to pay certain farmers in certain areas for their practices just so that they can put the sustainable label on their packaging, right? That makes sense. They don't necessarily have to buy your corn or soybeans, but they're willing to pay for it. But on the tax credit side, whether it be 40B or 45Z, I think you'd be surprised at how many farmers come to us and say, I am not going to let the government tell me how to farm. Right. And that's really not what's going on here. What's going on here is that if you have a lower carbon intensity for your corn, your ethanol producer is going to get a tax credit for it, and there you should share in some of that revenue. But, if you don't want to change your tilling practices, or you talked about Berto before, about manure, less synthetic fertilizer or cover crops, that's your prerogative. The government's not telling you how to farm.
Right.
But through a tax credit, the government is telling you that, your farming practices may be worth a little bit of money. And we hear, Chip, a lot. I used to hear this all the time, where farmers would say, well, I'm collecting my data through John Deere Center or, one of the other ones. Where's this data going? What's going on? You and I are old enough to remember when everybody thought, oh my God, the data is going into the cloud and Goldman Sachs is seeing this data and they're trading off of my data on my field, which we all know is just nonsense. But this is the time where you can get paid for that data. You've been collecting that data for years now. So if we get some clarity on 45Z, and unfortunately we don't have it yet, Secretary Vilsack said we'd get it by May 15th. Today's May 23rd. Secretary Vilsack, I said Senator Vilsack. I meant Secretary Vilsack. Secretary Vilsack, if you're listening, we're waiting.
Yeah.
Because this is an important part of how farmers prepare for next year, and how they make their plans to market their corn for this year.
Yeah. We've got the 40B, as you said, which would apply to the 22 crop, 23 crop that's being turned into ethanol right now. The 45Z credits are going to be on the 24, 25, 26 crop, expire in 27. More than likely, there would be an effort to get some extension on those tax credits to keep the program running going into the future. But Pete, we're talking about getting decisions from the Treasury Department about farming. We would love to get these details by Labor Day. By Labor Day, I think would be a huge win. It would give a ton of producers a lot of time to prepare if they so choose to participate in the program. But it's the Treasury Department, Pete. We're going to be waiting until September of 2025 for them to tell us what will work or won't work in 2025.
Well, that's why we're working with the consumer packaging goods companies in the meantime, because they are here present currently now, willing to pay money for sustainable practices. I agree. Look, I mean, the fact of the matter is that, the validation process on a carbon intensity score is very intense. We're actually talking with two very large, well-known nonprofits about their sustainability scoring and carbon intensity score. Because as you suggest with Treasury, I mean, if somebody slips up and, let's say, miscalculates your carbon intensity score and your ethanol plant can't withstand a audit from the IRS or Treasury or the Department of Energy, there's a tremendous amount of liability out there, right? So, I mean, this is one of those complex matters. But, what concerns me the most is that here we have a situation like we have with the RFS, where the government tells you a year in arrears what the numbers were last year.
Yeah.
That's what they did with 40B.
Yep.
And this is what I've been saying to people. I mean, this is just, it's unbelievable. I mean, people may not realize 45Z started with the second George Bush. It lived through George Bush's administration, put that through. It lived through there. It lived through Obama. It lived through Trump. And now Biden is bringing it to the forefront. I mean, it's been around for a long time. This is not something new, right? Yeah. Would I have liked to have seen the farm to fly be part of the farm bill? Yeah, but here we are again with the farm bill, right?
Yeah.
I mean, it's just it's a problem. But yes, it's true. I mean, this tax credit takes place on January 1st of 2025. Mm-hmm. Well, if you did not implement some of these practices for your current crop that's in the ground, yeah, you're not going to get there.
Yeah, that's going to be an issue, because there are going to be some at the end or even midway through 2025. There are going to be those in the industry that are going to be saying, hey, come on, what's the deal? We're supposed to be getting feedstock from the ethanol industry for sustainable aviation fuel, and the feedstock isn't there. Why isn't it? Well, it's because the rules and the regs weren't known in time to provide the 24 crop. And you can see the risk of that in the future, and you and I have talked about this a long time. So
the other risk that we have as well is that we've conducted extensive conversations with some of the protein guys, and the protein guys, they want to lower their carbon footprint as well. So what the protein guys are worried about is if this 45Z comes along, or when the 45Z comes along, that we're going to have a bifurcated cash market. Right? That's a real problem. If you're a feed mill, let's say in the middle of Iowa, and you're surrounded by 4 ethanol plants, you have to compete with them. But you also want to lower your carbon footprint. And a hog's carbon footprint is about 45% feed. So what are they going to be looking for? Lower carbon intensity corn.
Yeah.
Lower carbon intensity beans. And we focus so much on the corn, given the alcohol to jet or ethanol to SAF. But really, I mean, it also hits soybeans, because the CPGs, they have made these promises, they've made these statements, they need to stand by them.
Yeah, I hear you, man. I hear you. It is really something. So, are you still feeling confident in? You're one of the first that used the phrase domestication of the soybean market. Are you still confident that's the direction we're pointed?
A little bit less, because we just haven't had any traction on the low carbon fuel standard. So far, we still only have it in 3 states: California, Washington, Oregon. There's a movement in New York. There's a movement in New Jersey. We keep hearing from Illinois and Iowa and Minnesota that they're going to do something. I mean, really, the low carbon fuel standard really depends on who's going to buy this stuff. There's only so much renewable diesel you can pump into those 3 states on the left coast, right?
Yeah.
So, I mean, it's going slower than I would have thought on that front.
Okay. All right. We're going to continue this conversation here a little bit as we get into the next segment with Pete Meyer from Muddy Boots Ag. A couple of other things that I want to get into. Let's talk about the planting season that we've had to date, what it might mean for yields later in the season, what, of course, that means for the markets. Pete Meyer.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 11 1/4 cents higher at 7.10 3/4. July SRW wheat up a nickel, 6.98. July corn futures were 2 3/4 cents higher at 4.64. December corn futures closed at 4.86 1/2. That's up 2 1/2 cents today. July soybean futures were 7 cents lower at 12.39 1/4. November bean futures closed at 12.16. That's down 2 1/4 cents on the day. July cotton today 234 points higher, 81.72. On your livestocks, June fat cattle were 65 cents lower at 183.52 1/2. August feeder futures $1.45 lower, 261.45. June lean hog futures 87 1/2 cents lower at 94.52 1/2. Get more market news every market day. Visit tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Our name says it all. AgriTalk. What more do you need to know?
Welcome back to AgriTalk. I'm Chip. We're in the middle of a conversation with Pete Meyer, Muddy Boots Ag. Pete, you're a big picture guy. Dow is 600 points lower as we speak. From the ag commodities perspective, does that mean anything?
No. No, I don't. Excuse me. No, I don't think so. I mean, here we are. We made. I look at the broader market, so I look at the S&Ps. Right, the S&P futures made a 5-day high and a 5-day low today. I mean, does the volatility tell you that there's possibly a top coming in? I mean, yesterday we focused on the Fed minutes. You and I had this discussion very long ago where we both agreed that 4 rate cuts were just not going to happen. I think we both agreed that, maybe we'd get 2. Now we're not going to get any. It's just not going to happen, right? Oh, inflation is stubborn.
Really?
No kidding. I had to stop myself from using the word I wanted to use. No kidding. But you start to look at stuff, and like gasoline futures are the same price they were last year. Heating oil futures are a little bit higher than they were last year at this point. And that's a big part of it. So what that tells you is that, I mean, it's just, these, I'm all for people making more money, but, you also see, what was I reading the other day? The amount of chain restaurants that are closing this year. By okay, everybody knows about Red Lobster, but, closing, going bankrupt. Yeah. All these other ones that are just, out of money. And, California put in the $20 minimum wage, and a lot of those restaurants are being closed there. People are just not going out to eat. I mean, they look at it. Simple thing for me. I start every day with a large iced tea from Dunkin' Donuts. It was like $2.50 last year. It's $3.50 this year. Yeah. Don't tell it, okay, by the grace of God, I can afford an extra $1 every morning. But nonetheless, I mean, you just have to look at it and say, really?
Yep.
So,
okay. This I'll give you mine on that one. I make coffee every morning. It's Folgers. It's pretty simple stuff. Right now, it's about $9.50 for the big can. A year ago, I went back and looked. It was about $11. Okay, so it's down. But you go back 2 years ago, and it was about $7. Right. So affordability.
Let's look at the difference. Let's look at the difference between your cup of Folgers and my cup of Dunkin' Donuts green iced tea. My cup of Dunkin' Donuts green iced tea has to be handled by people that need to get paid. You're doing it yourself. That's the difference in the price. The labor becomes the price, right? Now we can go back and say, well, the Fed threw too much money in during the pandemic and everything got cheap, and or there was too much money around. I totally get that. But the fact of the matter is that as soon as labor touches something, that's where the price has gone up. I mean, Chip, let's go back to ag. Let's talk about what John Deere is doing in Waterloo.
Yep.
Right?
Yep.
Okay, here we go.
Laying off.
Now,
here we go.
It wasn't that long ago that the United Auto Workers, and I don't mean to pick on unions, but the United Auto Workers was doing a celebratory dance around their contract with John Deere. How's that working out for you now? Right. And the question now becomes is that contract was the basis for the contracts with the big three, Stellaris, GM, and Ford. How's that going to work out? Have you gone past your, I'm sure you have, your local car dealer all over the place, whether I'm in Iowa or Illinois or whatever, they're chock full with cars now. What's going to happen now?
Yep. Yeah, no,
I don't know.
with you.
There's to your point on the stock market. I mean, to quote my dear friend Alan Greenspan, unbridled exuberance comes to mind all the time. But the fact of the matter is, if you try to stand in the way of this thing, the money flow is just going to run you over.
Right. And that has been proven time and time again. That's the amazing thing about it. Okay. Yeah. Let's talk planning progress. Anything got you worried?
Yep. No. I mean, I think that, so we're about 7 points higher than typical late plant. I saw something online the other day. They were talking about it. Yeah, I guess if let's say we're 75, we were 75%. Personally, I think the numbers were a little bit low last week. So let's say for corn, for instance, let's say we're at 73, 74, 75. Typically around this time of year, we're at 18%. So that's going to be lower. So what does that mean? That's going to mean that, you could probably take a few bushels off of your trend line. Are we, 179 and a half, 180 if you believe in the trend line? It's probably still there. But,
okay.
The next question is, prevent plant and acres. I mean, I was of the opinion that, the prospective plantings numbers, which NAS hates, Lance and the boys, they hate that number, or they just hate it in general. I thought it was about 2 million acres too low, and I thought those 2 million acres would go into corn, and we'd plant 92 million. Now I don't know anymore. Now I'm thinking, well, maybe we're going to plant 91. The soybean numbers seem to make perfect sense to me. So,
okay.
Did we lose some acres? But, you talk to a guy like Treg Cronin out in South Dakota, he's got his crop in, but, guys are talking about taking prevent plant out there, and he says, it was such a nightmare the last time they had to take it that most people will do everything they can to get it in the ground.
Plant a crop.
But
yeah.
Right. But I mean, when you also start to look at like from your alma mater, ISU, the ISU Misonet, I mean, you look at how wet it's been, it's really just totally focused in Iowa.
Yeah.
I mean, the Northwest
crazy.
crop, the Northwest quadrant or Northwest crop district, second wettest in 132 years. Yeah. West Central, wettest in 132 years. North Central, wettest in 132 years. It's nuts. But then you just go across the border to Nebraska, and they're like in the 20s or the 30th wet, still wet. Yeah. And then you get to Illinois, the center of Illinois is like the 75th wet, which is right in the middle of it. Yeah. It's the strangest thing.
Yeah, and there's some areas there in eastern Nebraska, 17 inches of rain in the last month. Yeah. In Nebraska, dude. What the
But damn
world?
it, I am so glad to get rid of the drought word this year because it's so overused. Let's But a wise farmer once told me years ago when I first got in the business that he'd rather have it dry than wet because he knows what to do with dry. He doesn't know what to do with wet.
Right.
Suffocation of roots, compaction, you name it. It could be a problem. But never mind the fact, the terrible stuff that happened in the Omaha suburbs and Greenfield. If anybody doesn't think climate change is moving around, well, Tornado Alley took a big step north this year.
Yeah, it's interesting. What's the upside potential in this corn market?
I think it's going to be a grind of $5. I think we can get the $5. That's not going to be a happy time for some producers that we know, and many people know that probably their cost of production is in the $5.15 to $5.25 area. But I think I've been kind of on the record here in the last month, Chip, to say it's going to be a grind, and it has been a grind. I hope I'm wrong. I really do. I hope we just wake up one morning, it's 10 higher. We're trading $4.95. We could trade at $5, $5.01, something like that. But outside of that, I really don't see. I don't really see some upside potential. That much more upside potential. Your handsome newsman was talking about them reducing the Argentina crop. Mm-hmm. Okay, that helps a little bit as well. The Russian wheat crop is probably sub 85. The USDA was at 88. I think we're probably between 80 and 85. The wheat market is certainly reflective of that. Back over $7 again on the close in the front month. That's all supportive. But you kind of touched on it a little bit earlier as well in your opening comments. These beans are just like, it's one of those markets when they look the best, you got to sell them. When they look the worst, you got to buy them.
You got to buy them.
Today it looked so good in the morning, and next thing you know, we closed out 7.5 cents.
Yep.
It's like they're on drugs.
Yeah.
Or taking one of these energy drinks or something. I don't. And the rush kind of runs out after the opening. I don't get it, but very strange.
Yeah. Well, strange. And you make a great observation right there, Pete. When the early upside momentum drains out of the market late in the day, nobody trusts it. Nobody trusts the early strength, so they're looking for their opportunity to jump in there and sell it. Yeah. Yeah.
No,
Yeah, pretty tough.
What else? What other world problems can we solve today, Chip?
The one thing that I am curious about, or that I've got on my list that I wanted to get to, what are you hearing on the Brazilian corn crop? Anything on that safrinha crop?
No.
Okay. All right. That solves that.
I just don't. Yeah. I think you know me for a long time. I'm not going to make up stuff here. I'm just not hearing anything about it. I'm really not. I think that, and when I say I'm not hearing anything, that's from people down there, right? They're just not. Now, are they quiet because it's bigger than they thought, or are they quiet because it's smaller than they thought? Who knows? I mean, I don't.
Okay.
But I just don't. I don't see it as a market mover.
Take a minute. Take 1 minute, no more, and explain to me why jet fuel producers are importing sugarcane ethanol from Brazil.
Extremely low CI score, and it's a feedstock that's readily available, and they can get a tax credit from it. Believe it or not, the tax credit is not based on the where the feedstock was domiciled, where the feedstock came from. So if I was LanzaJet, you're referring to LanzaJet in Georgia, sure, I'd be importing it as fast as I could. There is demand for sustainable aviation fuel. And because if you look at whether it's United, Delta, Southwest, airlines that we work with all the time, you look at their ESG statements, that there's no way they get there without turning alcohol to jet. The problem you have with Brazil is that Brazil will not be a reliable supplier. And by that I mean when they have a big sugar crop, they raise the ethanol rate at home. When they have a big bean crop, they raise the biodiesel, component at home. So you can only trust them when they have a big crop.
Yeah, that's right. Pete, great to talk with you again, buddy. We'll talk to you again soon.
Thanks, Chip. Appreciate your time. Good luck, everybody.
If the world is your oyster, we've got pearls of wisdom on AgriTalk. Welcome back to AgriTalk, everybody. Your pal Davis Michelson here. Chip Flory as well today. Yes. You know what? Let's start with. Thanks for listening, everyone. We appreciate you. Good conversation with Pete Meyer.
Yeah.
Of Muddy Boots Ag and other apparently places. He's got a whole thing going on.
Oh. Yeah, he's working with a lot of people in a lot of different capacities right now, and
that's cool.
It's all good. Yeah.
Let's start with Oliver. Volatility ramps up this time of year anyway. So what are we getting so excited about? I'm not sure that's the way he said it, but we're in a volatile portion here. Seems like maybe, be a good time to think about doing something, right, before it gets away, or no?
Yeah, absolutely. Absolutely. You know what we always talk about is be there before the market gets there, right?
That's right.
Even if doing something is getting your price orders in place.
Mm-hmm. Yep.
Get it done.
Yep.
Yeah.
Hey, I thought about barging into the conversation about the low carbon score. We'll just use corn, the low carbon score crops.
Yeah.
And I can't help but think, and I'm probably thinking about this all wrong, okay? This is all out the window if you're delivering directly to the commercial user. You're taking it straight to the ethanol plant. You're taking it straight to Lanza, whatever they're doing there, whatever. I'm thinking about the used cooking oil thing, dude. With the accusation being China takes this delicious palm oil that's perfectly fine and unspoiled,
Right.
and dips a hot dog in it, and now suddenly they're going to ship it to us as though it is, in fact, used cooking oil. So who's going to handle this grain? He talked about a bifurcated cash market, and that sounds awfully complicated. Now, if an elevator's going to handle this, they got to keep it separate somehow. They've got to keep it. I don't know.
Ding,
man.
ding.
This is just a
Ding,
new wrinkle
ding,
that
ding.
is kind of unfolding in my
ding,
head,
ding,
dude.
ding, 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 ding. You are exactly right. Senator Grassley. Some people like the short little videos that Senator Grassley does on his social media. Mm-hmm. Some of them, I think, maybe didn't need to do that one. He did one standing in front of the DNH elevator.
Oh, is that right? Uh-huh.
And talking about how in the world are we going to be able to deliver corn to this elevator, and then the elevator is going to have to keep things separate?
Yeah.
You know, based on a carbon intensity score, and take the low carbon intensity score corn in that direction, and the normal or regular or whatever it's going to be called corn, and put it in that direction. Mm-hmm. Well, here's the deal. In other words, it's a big concern. It is a paperwork nightmare and bookkeeping nightmare is what it really amounts to. But here's the other thing. If it starts out as a premium market for low carbon intensity corn, I get that. All right, let's get paid for that. Let's get paid for that. But we have seen it in the corn market too many times. And matter of fact, if you see this once, it's too many times. And it's been more than once. But where the premium market becomes the expected standard. And it becomes the regular price for corn. So you go from a premium market to, the board price that you see there, that's for the low carbon intensity corn. If you've got something that I can't put in that program, go to my discount schedule. And that's no fun.
Yeah.
When we start talking about discounts, not just simply based on quality, does it make number 2 yellow corn, but on production practices and the carbon intensity, could we get to the point where there's a discount schedule in place?
Oof.
That is that's complicated, as Pete just said. Now, the other thing that Pete said was the low carbon corn is going to become the market because the is the market going to demand beef finished with low carbon intensity corn? Probably. What
Once
about
they
pork?
hear about it?
Yeah. What about pork produced with low carbon corn? Yep. What about chickens and eggs? Yeah. So that's the direction it goes. Therefore, you go very quickly from, we'll pay a premium for low carbon corn to low carbon corn is the market to a discount schedule if it's not low carbon corn.
Well, that's interesting. But people have gone out and looked for grass-fed beef, milk-based
very
pork.
low carbon.
I mean, whatever you want, it's out there. Has the organic lettuce market destroyed the conventional lettuce market for the producer?
Not at the Flory House.
Yeah.
Has it taken a bite out of conventional production? That may be.
Yeah.
You know what? We should talk to somebody at the Packer.
That's a good idea.
And find out exactly what the organic market has done to the conventional production markets.
See, and the grocery store has it figured out. They have an organic shelf, an organic cooler, or at least at my local grocery store, and then they have, non-organic stuff on a whole different shelf.
Right.
It's very easy for me, the consumer, to keep that all straight.
Yeah. Same here.
Yeah.
They keep it simple for guys like me.
Oh, yeah, me too.
All right, National Weather Service 6 to 10 day outlook, May 29th through June 2nd. We've got above normal temperatures expected in the western production areas, northern Wisconsin, all of Minnesota, western Iowa, far western Missouri, Arkansas, and points to the west are looking at above normal temperatures. Near normal temperatures in southern Wisconsin, eastern Iowa, eastern Missouri, Illinois, and then a mix of near normal to below normal in the far eastern production areas. Above normal precipitation expected basically west of the Mississippi, near normal east of the Mississippi. All right, thank you so much for listening. We got the free-for-all tomorrow morning on AgriTalk.